Greetings, Tezos Nation. Welcome to another edition of TezTalks Live. I'm Stu from the Tezos Commons. Joining me today is Kevin Mehrabi, co-founder of StableTech, creators of TezFin, the first on-chain lending platform in the Tezos ecosystem. StableTech, for those who might not know, is an association of Tezos ecosystem contributors which coordinates the building of stable, scalable, open source technologies advancing open Tezos DeFi L1 infrastructure for the betterment of the Tezos ecosystem at large. On today's stream, we'll be giving away $50 in USDTZ to one of our lucky viewers. If you'd like that lucky viewer to be you, keep an ear out for a keyword later on during the stream. Then comment with the keyword below this video where it's posted by the @Tezos Commons account on X. Hi, Kevin. How are things in LA?
Hello, Stu. Things are great. Still, a little brisk, but not so bad considering the winters the rest of the country. But yeah,
Fair enough.
you know, I,
Um, you introduced yourself and told us about your personal journey down the Tezos rabbit hole during your
Mhm.
last appearance on TezTalks. So this time I was hoping we could start off with you telling us a bit about StableTech, how it was founded, and its place here in the Tezos ecosystem.
Yeah. So back in 2019, when we were just planning to see what we could do and what I could do within the Tezos ecosystem, I knew it wanted to be before DeFi had a name. We were saying finance. I wanted to do stuff in finance. And also, I wanted to go after what was the most critical need at the time, and also just looking at the general economy. I studied. I have two business degrees and everything, so finance was not an emphasis of mine then. I was more into entrepreneurship, technology, but just going back and actually even reading my old finance books and everything, it's stable assets that were really the big thing that drives everything else. Everyone's attracted to high risk, high ventures, high early stage venture, kind of that sort of a risk premium heavy type of stuff, especially in crypto. I mean, everywhere, but especially in crypto. But looking at the general economy, it's like, well, wait a minute, it's stable assets that really drive everything. And then you look at the numbers in what was finance at the time. It's like, oh, it's the tethers of the world, it's the USDCs, it's these stable coins that are doing it. And not only that, but if you look at the types of things like liquidity and returns people are getting for DeFi activities they were doing, it's these dexes with a steady return, but not betting the farm on everything. So it's like, oh, this is a little more of a boring area, but it's actually the most secretly exciting one because it drives everything else that's so obviously on face value exciting. So I found the right partners. I feel with Cryptonomic, and they've just been wonderful to work with. And we joined each other in this thing called StableTech, which is this consortium that you mentioned. So we wanted to go after three key areas. And doing it in a decentralized way, so it's not any one company or person that controls this. So that's one of the reasons why we created a consortium. So we went after three key areas. One was stable coins. That was the first thing we needed. So reserve-backed stable coins, because those are the most scalable and stable. And then so USD Tez started with that. TezX became the exchange. We did the first ever peer-to-peer cross-chain atomic bridge between Tezos and Ethereum. And soon we want to expand that to Bitcoin as well and revamp that for TezX. And then the thing after that, the one that took the longest time and the most complicated we made and the like what's rolled out last week, finally in production version, the beta having launched in 2022, is TezFin. That's lending. And with those three areas are the key to scaling DeFi. You can't do one without, you can't scale it without all those things. But in particular, that kind of crowning keystone arc is lending. And so that's why it's been such a big deal for us.
Okay, and as you mentioned, TezFin is the keystone there, and that's what we're mostly
Yeah.
here to talk about today. So,
Mhm.
can you talk a bit about exactly how on-chain lending will work with once TezFin goes live?
Well, TezFin is live. TezFin is mainnet for the production version, the audited version, the one that we've said, okay, let's scale this thing up, not just to mess around and to like having we had the beta launch in August 2022.
Okay.
It was the first mainnet beta or lending to go live. Upana followed a couple days later, and they've been doing well. But really, it's these. It's what I've been waiting for even Upana and for us is to have a couple of these, like us and them, because in Ethereum you have a Aave and Compound, which are two lending platforms, and then they interplay with each other because there's cross pool arbitrage and all that. But anyway, I wanted to say that to give the piece to Upana. But the key with TezFin is, and why it took this long after that initial beta launch is, we spent 2023 mostly just going through the security audit, getting security audit done, complete, and having the audited version out. Tezos Foundation sponsored that security audit. It was performed by Inference. It's very, very useful, thorough process, but yeah, it takes a long time to do a security audit. We've gone through them before, but this was definitely the longest one. But that, so that's where we are with that. And yeah, so and the other thing is, I think some people point out, it's like, didn't we start teasing this back in 2020? Yeah, we did. And we tried. The thing is, the Tezos protocol was initially built in a manner that's so secure to prevent these things called reentrancy attacks. So that's how it was built. Tezos was built for that. But the problem was it didn't allow us to make dApps like lending until some of the upgrades that came to reconcile that back in late 2021. So early 2022. And even though we started building over the last year at that point, TezFin, without those upgrades, like just trying to find workarounds to get it done, we basically started over in 2022 because it's like, well, now we have to, the protocol's been upgraded so much. So, we had to rebuild the whole thing. So yeah, it's been a long road to get here, but we're very confident in what it means for the ecosystem, what it means for Tezos. It really is the key to the scaling of DeFi, which I feel is the last thing we need to have a comparable overall economy to, I think, the other numerically top economies, whether that's organic or not, that they have. But we'll have it organically. And for Tezos overall to achieve a top bracket position, which some people measure in different ways. But yeah, this has been the last thing that's been needed. So yeah,
and we'll talk more about the impact on scaling a little bit later. But I'm just curious, are there any limitations to who can borrow and lend on TezFin, or what they can borrow and lend for?
Yeah, so what you can lend, you can borrow for anything. Everybody starts as a lender. So whether you want to borrow something or not, you start as a lender, you make a deposit. And with that, you get a rate of interest. The pool that you've deposited to grows, just a single asset you put in, not like a liquidity pool on a DEX where you have to put in two different assets. Just put in one. And it grows on interest. So people compare these to accounts that they have in the traditional world where you grow something on that basis. If you want to, you can click a button that says collateralize this amount that you have that's growing on interest that you have lent and deposited. And with that, you have a borrowing capacity. So around 50% of the capital that's worth, you can borrow in like another stablecoin. So you can put in Tez. It's like, all right, I'm growing the amount of Tez I have over time, and I'm not missing out on the price gains of Tez as the price of Tez grows. That's good. And as the price of Tez goes up, then the borrowing capacity goes up because it's all measured in US dollars. And then you can borrow some US dollar and then use that for either just your life or whatever you want, or to go and buy things. A big thing is, buying. That's our big cash crop on Tezos. It's been NFTs. Tezos is very unique in that it's the only thriving and definitely one of the top NFT ecosystems, art ecosystems out there, arguably the top fine art ecosystem out there. But it's unique in that it hasn't had a scale DeFi ecosystem first. Tezos has not had a scale. All the other ones, especially the ones that were very centrally planned NFT economies, they built out their DeFi ecosystem first. They got the liquidity in there. They started getting traction on that front. And then they said, okay, let's go after NFTs. With Ethereum, it happened organically. The DeFi grew, and then came the art market, the NFTs. With Tezos, it's the only one that's the reverse. So it's interesting. And a lot of people said that we weren't going to have a lasting NFT art market because we don't have scaled DeFi. Well, we all proved them wrong in the Tezos ecosystem. It's years and years later, and we're chugging along, doing very fine. But just imagine what will happen once we have scaled DeFi. And to put that into a general context that people can understand, it's like, why do we need it? It's like having like a country that has like an art economy, or some society that does, but no system of banking or finance at all. No, none of that. It's like it's not able to grow.
Mm,
Economies can't grow without systems of lending, without banks, without a finance sector, because capital markets, they can't borrow against their collateral positions. They can't bet on the future being better than the past or the present.
yeah.
And it gets complicated, and I think that's a later point to make. But like the ways in which this affects people, not necessarily directly using it, which is a very key point. It doesn't mean this will affect you if you're an artist, even and a collector on object, even if you don't directly use it, because the secondary and tertiary effects of this come back to you. Just like same thing on Ethereum, even if you don't use DeFi at all, or the lending at all, the major success of that on Ethereum definitely affects your bottom line
Mm.
in the art markets and what you do. That it wouldn't be anywhere nearly what it is otherwise. So
Well,
that's the key thing.
that is something I wanted to ask about because, as you say, like this is certainly not the first time. It's not the first on-chain lending platform in the larger blockchain space.
Hmm.
Are there
Yeah.
examples of platforms on other chains that have been successful? And can you talk about what impact those platforms have had in the blockchain ecosystems where they've been successfully launched?
Yeah, so on Ethereum, and I'd say the biggest like kind of poster child examples are Aave and Compound. Compound in particular, they were the ones to really lead the growth and scaling. But also, if you go to Tron, there's Just Lend, there's a couple other you can go to DeFi Llama and look at each chain and all of DeFiLlama.com, two L's. And you can see each chain and all the categories of platforms and the amount of liquidity that each has. You'll see the biggest category for all of them is lending. Either it's the top platform overall, or if you combine the top two lending platforms, you'll have the largest liquidity. You'll see. But yeah, so all of them, that's the biggest category. And not only that, but it's the driver of growth of liquidity for the other DeFi categories. So if you look at when Compound started to scale, as it scaled, you'd see Uniswap, which a lot of people would just instinctually think, oh, that's probably the largest, right? That's probably the largest DeFi platform. No, it followed and still does the scaling of lending because that access to capital markets is what enabled the liquidity that people could put into those liquidity pools, those DEX liquidity pools that Uniswap was able to utilize, and aggregators were able to utilize. Yeah, and everything else definitely followed suit. So the farms and the other stuff. I think people think the determining factor is the stuff that they personally are interested in most, or the stuff they've interacted with most. Because so some people might say, oh, well, if we had more farms, we'd have liquidity. No. The growth of farms and the sustainability of any of them for however long they last, it is very much dependent on lending markets and everything that falls out from it. It's a dependent factor. The strongest, most independent factor is lending platforms. So yeah, look at Compound, and on DeFi Llama, it's great because you can also look at the timeline to see liquidity growth and see what followed what. So all the stuff I'm saying, you can go and look and verify. But yeah, so there is this direct causal relationship. It's not just correlated. But as sheer size, it's in terms of liquidity, the amount that's in it are in these pools, it's somewhere between 35 and 60% of DeFi liquidity markets are amounts that are locked in lending. So the sheer size of it is huge, the causal effect of it is huge, and then the effect of it to every other part of the blockchain economy is enormous. So we'll have that now. We need to scale it up. And I think one of the differences, between us and say like a Upana at this point. We see three markets for us. There's a number more for Upana. We're going to be growing at a rate that we want to get a critical mass of liquidity, of borrowers, of borrowing activity, of debt that people are accruing until we move on and add more capital markets, more lending pools of different kinds. And we're going to start with reserve back and move towards algo coins and volatile coins after that. But we're going to do it in a very measured approach. And we want to just see this move organically and understand everything we can about the market and the dynamics of shifts in lending and supplying and borrowing. So
Okay.
yeah.
Well, I mean, decentralized finance has seen its fair share of fits and starts here in the Tezos ecosystem. Is
Mhm.
this do you feel like this is the missing piece, or are there other things involved in
100%.
in helping DeFi to achieve its promise here?
Yeah, I mean, we were in DeFi, like we're one of the few people who are, I guess, still around that could say we were in Tezos DeFi from the very beginning because we made USD Tez back in May 2020. There were no DEXs that could at all. There weren't really any wallets that facilitated even showing tokens. So we really, yeah, we went very quick on that. So when Dexter came out, the first DEX on Tezos, September 30th, 2020. So we were one of the first two exchange markets on there. And so we were able to watch the very early growth of it. And then within the next year, we had Kipu Swap and Plenty and Crunchy and Spicy Swaps, also down all that wrap protocol, which got rolled into Plenty. But what we were able to see is the growth of liquidity and how and why and what happened afterwards. What those platforms did, especially Plenty, the lion's share went to their efforts, and credit is due there, that they were able to scale to show that you can get $100 million in Tezos very quickly. Today, maybe you could think of that as like, oh, billions pretty quickly. You could just get it to show up if you put in the incentive. People will come here. People will do
Mhm.
that. They will get a Tezos wallet. They will activate it. They will participate in it. Where the incentive is, that's where they'll go. There's no there's no barrier there. And yeah, we were scaling DeFi pretty quickly until and we didn't have lending back then in 2021. So and at that time, in the summer, towards the late summer, if you looked at the TVL of Plenty, for example, over half the TVL was in USD Tez pool and in an ETH Tez pool, and so that was stuff that we interfaced with, and our minteries would report back to us, and these are the people who would mint and redeem as a service for people who'd want to liquidate or mint more of these tokens. That like people would ask, like, is there a compound or an Aave on Tezos? Is there a place that we can put this after we're done with the farm? Otherwise, we have to just go to liquidation, because
Mm,
they're looking out for new opportunities, but they want to keep the money on hand, or even just for the price rise of Tez. That's a lot of money you can make by arbitrage, just
yeah.
buying up, quickly following the centralized exchanges in their market. So, and then the answer would be no. In fact, the protocol isn't even ready for that. We're working on it, but give us time. And so they would just liquidate. So we saw, if you look at you can see on DeFi Llama, the charts, like the liquidity just exited as quickly as it came in. That's a very primary case. Like those liquidity providers actually wanted to instrumentally use this. But also, imagine if they did, and what kind of supply that would open up for borrowing. It would have opened up a very cheap, like a very low cost of debt, low cost of borrowing, ability to borrow Tez or ETH Tez or USD Tez. And then you could use that in other things. And now, I mean, you can use USD Tez, for example, to buy NFTs on Object. You can list them for USD Tez. You can make offers in USD Tez. And Brian had mentioned, at least on Twitter, that from Object, that they're working on an auto convert feature, so you could just pay in any currency. So like that would be, imagine if you are in the art ecosystem, especially because that was at such a head at the time too. If we had kept all this liquidity in Tezos, if it were opened up for actual borrowing that was very, very cheap, and then artists' bottom lines would increase. I mean, that's the number one complaint of artists in Tezos, is there's not enough liquidity. We want to get the price points to be as they are in other places. They'd be able to get that. People would be able to buy more NFTs, more of them, and at higher prices, because they're able to stretch out their risk profile. And then artists could do what? Well, they don't necessarily want to liquidate. They don't want to miss out on the price rise of Tez either. I mean, they need to have money to do things. So that creates another option. You could deposit it in this pool. You can borrow the USD you want to get. You can use that for what you want, or buy more NFTs with it. And then that does what? That grows the artist economy, which puts more money into TezFin, so on and so forth. So it does creates a multiplier effect, and that affects a compounding, which just increases liquidity. And right now, I mean, it's not just that example I mentioned of people who would liquidate and take their money out of the ecosystem on the DeFi end. you know, on some, it's arguable that our success in the NFT art market before all this, before lending, it actually puts the price of Tez because people who, if you're actually, I mean, some people do and they spend the Tez they on more NFTs, but other than that, what are you doing? It's like you're taking the Tez, you're going to a centralized place, an OTC or Coinbase or Binance or whatever, and then you're cashing out, you're liquidating. So that's a
Because that's how
sell
you're making
operation.
your living.
Yeah, yeah, it's a sell operation, and then that trading, that OTC or that exchange, like they need to either sell that or put that into certain positions. So it's puts sell pressure on the price of Tez. So this prevents that. Instead, you put it in a deposit in, well, it doesn't add to demand pressure onto or sell pressure onto the price of Tez, and it keeps it in the Tezos economy. So it's actively like part of, and it takes it out of circulation effectively for as it's locked in, and it creates it adds more supply for a lower cost borrowing market so that people can use that Tez for something actively that they want to do, which is spend in the Tezos economy, and then that grows the Rs bottom line even more, that or the merchants bottom line even more, and so it's like it's taking the worst thing that happens and turning it into the best thing that happens. That's the key difference here. So yeah, we
Okay.
need to. So yeah, so whether you personally use it or not, like it does affect you because it affects the overall economy. It puts more liquid capital out there and encourages more spending operations as well without taking money and out of the ecosystem or putting sell pressure on Tez.
Okay.
So that's the key.
So with all of that in mind, what do you say to those? And there are a few out there who say that the DeFi ecosystem on Tezos has already completed its arc.
Yeah, they don't know what they're talking about. But most people don't. You have to kind of be really nerdy into this stuff to see. But we haven't even started yet. Like we haven't started until we have something complete. So like we just did not have the entire machine that enables DeFi to scale. In as much as any economy without any kind of a banking system or a bank would not have any ability to scale. So we've had the other elements, the extension elements, the things that will scale as a function of this. So we have dexes, we have stable coins of various types, algo coins, very important part as well. And people want to add farms. Okay, sure, not necessary, but definitely something that drives activity. And we have commerce sector, not just the finance sector, like all these different components. We have an organic commerce sector with NFT art. Like this is huge. A lot of people would criticize and do criticize DeFi to say, oh, well, it's just creating a financial system for the sake of having a financial system. I mean, other than spot trading, what is it really for? We have the best answer for that in Tezos and in the most perfect position. We have this organic, thriving, huge, very well used art market. It's commerce. It's the commerce sector. We just have been missing this finance component. So it'll be very interesting, I think, for all of blockchain to go and see like what happens when you add that in afterwards, and to see how much that'll grow commerce. I think it'll be definitely a lesson for all of blockchain. But yeah, lending. Look up the role of lending in any economy. I'd say to those people, and it's not another DApp. It's the thing that all the other DeFi dApps are dependent on. So between TezFin, Upana, and other DeFi applications, I imagine to come, and the utilization of them, we'll start to see scaling to a level that was just completely unprecedented in the Tezos ecosystem. And I think we'll have that this year for sure.
Okay.
Yeah.
Well, with with TezFin now in production launch, as you've told us, what do you expect to see from this blockchain and its ecosystem with that in place in the year ahead?
I think we're going to have a surge of activity and participants. I think people will come and stay. I think people will start to see what they have, the capital they have in Tezos, as something of a permanent fixture, as opposed to maybe a fly-by-night opportunity. Either I'm just going to get this NFT, or I'm just going to participate in this farm. But no, I'm part of the active Tezos ecosystem. And I think also even the culture and opportunity for those people who are what we'd call merchants, or really the artists that have been involved. I mean, there's other things besides that. There's people involved in gaming and other things, and there will be definitely many more sectors. But definitely the biggest thing on Tezos has been art. Uh, I think this will definitely be transformative for their lives and their livelihood, and they don't have to make a choice of, I can be bullish on Tez and hold that, and spend on that, or I can, feed myself and my family, and just live and do other things. It's like, well, now there's a way you can do both. You can, participate and do it in the best way possible, which is you can put Tez in a place where it'll grow. You'll grow with the price of it. And you will create for yourself a borrowing position that will let you buy, or rent out effectively, stable coin that you can use for those other things. And as the price of Tez goes up, so does your borrowing capacity. Or the opposite is true. If you're bearish on the markets overall, totally, you can put in US dollar and then say, well, I'm going to borrow the thing that I think will go down, and then I'll have a larger, if that's Tez, if that's where your mind is. I think we're in a general bullish sentiment these days. So, and people don't like when you like to talk about the other end of it, but whether things go up or down, but nothing grows in a straight line. That's the other important thing I think people
Hmm.
need to keep in mind. It's like no one can, like, you're not really bullish if you're bullish 100% of the time, because you're not being realist. Even if it goes jaggedy in its way up, it's, there are little down swings in that. That's part of it. So I think, that's something that people will start to be able to appreciate too, in their approach to capital markets, as well.
For sure. This is all great stuff so far. I'm really excited to learn more. But before we get into the nitty gritty, are you ready for the world famous Tez Talks lightning round?
Oh yes, let's do it.
Great. Just before we do that, I'd like to announce today's keyword for the $50 in USDTZ we're giving away today. Today's keyword is exclamation point TezFin. Enter the keyword exclamation point TezFin below this video on X, and Nightbot will randomly select today's winner, who will announce in the comments below this video as well. Okay, now, Kevin, it is lightning round time once again. Remember,
Mm,
there are no wrong answers. This is just for fun, so our viewers can get to know you a little bit better. Are you ready?
let's do it.
Chicken or fish?
Chicken, because
Form or
you can't you're not gonna have hidden bones with a chicken.
good answer. Form or function?
Mm, form leads to function.
Beaches or mountains?
Beaches, in a zombie apocalypse, mountains.
Fair. The best cuisine in the world comes from which country?
Oh wow, let's get back to that one.
Are we alone in the universe?
No,
Who is your
mathematically
hero?
improbable. Arthur Brightman,
Wow.
founder of Tezos. Arthur Hussein Brightman.
What is your
His middle name,
favorite
right?
band? That is the correct answer. What is your favorite band or artist?
Queen.
Good answer. And finally, oh, we'll circle back. What's the best cuisine in the world comes from which country?
Everyone's. I don't want to be biased towards my own heritage, but it's what I grew up with, so Persian. But if I were to say outside of that, Italy.
I'm a big
They
fan
figured it
of
out.
Persian cuisine myself. It's wonderful.
Uh,
And finally, what is your favorite thing to do on a rainy day?
I That's a good time to meditate. That's something I get so relaxed by the sound of rain. It's beautiful.
Nice. Those were excellent answers. This concludes the
It's a
TED
very
Talks.
LA answer, I think. Or-
It's such a rare event for you, right?
yes, it is. Yeah, let's do the yogi thing.
All right, let's get back into it. Obviously, as we've already talked about, the Tezos ecosystem is home to one of the most lively art communities in the blockchain world, and I know you've already touched on this, as I said. But what impact do you see on-chain lending having on collectors and artists, on the collectors and artists that comprise that community? Can you expand on that a little bit? How you see that unfolding?
Yeah. So like there are primary benefits if you want to actively use it as an artist and collector. So as an artist, you can deposit funds to TezFin, earn on interest, grow the amount as explained, and as a collector, you can borrow, another form of currency, say U.S. dollar stablecoin. Maybe you're edition flipping, right? You want to flip the editions. So it's like, well, I don't want to miss out on the price rise of Tez in between that time, even though I'm flipping. So let me put the Tez in here. Let me borrow some USD stablecoin. I'll buy a bunch of editions. I'll flip them. I'll put them back. Okay, I'll profit, and then I never spent a penny without compromising my initial capital position because that was just in collateral at the time. And then, but what that does is because it extends the risk level and the risk tolerance of the collector, they will then, the laws of economics would suggest they will then buy more of these NFTs. They will buy them at higher price points. What that does to the artist is it increases their bottom line. Now they can go and call it a day then, or they could also participate and then put that money into a deposit, and grow in that regard as well. And then ideally, that's the cycle that keeps growing, and that alone would continue to grow the liquidity in TezFin and that for DeFi and beyond. But even if they don't, even though that's not the participation, well, it does put far more money in the coffers of the ecosystem. So if somebody else is using it, say to borrow money so they can add to a lending pool or put it in a farm or to liquidate someone's position in something else, these are the other things people can do on the DeFi end with lending markets and being able to borrow money. Well, that grows a lot of activity. That definitely that stimulates the economy generally. And what that does is it also puts more money in the hands of those who would go and buy the NFTs. So they're buying more NFTs ultimately from more artists at higher price points. And then that money ideally, again, would go back to the lending markets because that's the best place to put it. But even if it doesn't, it's still helping them grow overall. And then, so that would be like a secondary effect of it. It's just helping some other area grow, and then somebody else benefits, even though if they're not participating. So the artist that benefits from a collector borrowing money, or somebody else getting more money because they can borrow from TezFin or stuff that they would do with that, that is a secondary effect that would help them. And this is already very much the case in other ecosystems. In Ethereum, I mean, that's what's been happening. And then the tertiary effect is if neither that person or the person who buys had participated in this at all, well, their money ultimately comes from a place that would be affected by it, or overall, even the price. You could even look at, I'm trying to say this right, so it's not financial advice, just for education, giving an example, and all else the same. And then, if by putting more Tez in locked positions, taking it out of that liquid trading exchange market, takes it away from a position in which it can be sold, and also constrains the supply, the circulating liquid supply of Tez, which, and if you know about the economics of that, you can imagine what that would mean for, say, price and potentially a price and potentially market cap. But again, this is just a random example and not necessarily true, and do your own research.
Purely theoretical,
yes,
right?
Yes. It's always hard to talk about that stuff because you want to explain a concept, but you don't want to because you just know someone's going to be like, but you said this was going to. No, I didn't say that. I very much safeguarded my words. So
but
that would be like a tertiary way. Yeah.
In theory, a rising tide lifts all ships,
raises all
in
boats.
the ecosystem.
Yes.
Okay.
Yeah. So a very key thing. And so and for my end, I mean, what I've been doing, we've been closely watching the system and getting there's always some initial cleanups that we have to do based on user feedback. So we've been doing that. And also, to me, it's more like looking at just seeing organically what emerges in terms of people coming in and as a bellwether for activity, and also us putting out any kind of market education. So part of it, I want to, and what I want to do here is explain the ecosystem imperative of lending to grow TezFin, to grow Upana, and because of what that means for DeFi, what that means for the Tezos economy overall. But then also there's this other end where I do explain on a very direct effect, like here's how you can utilize this as an artist, as a collector. And those are educational materials I'm working on and will be publishing soon. So, but yeah. And keep in mind, I mean, there's smart contract risk everywhere, and we could talk about the benefits of so many things and so many applications. But we feel very confident in this model, and certainly went through security audit for the last year of our lives. We're at the point where it's like, yes, come in, feel free to add liquidity, putting in our own liquidity. We believe in this that strongly. It's an exciting time. I'm excited to see what it leads to. Definitely we'll have financial literacy and lending and DeFi education for artists. That's something that I back in 2021, early 2020, I was doing clubhouse rooms for like DeFi for artists. That's what I called it. I was doing that every week. And then I realized it's like, none of this is sustainable unless we have lending first. So maybe we should focus more of our time and efforts on that and overall ecosystem scaling. And then the DeFi participation will stick, and start to accumulate and grow and compound.
And
So
now
going back
here
to that.
you are.
Yes.
Now here you are doing exactly that. It's interesting to hear you describe this as an ecosystem imperative, and I'm wondering if you can expand a little bit on what you mean by that.
Yeah. So given the role that lending has for DeFi, and given the role that I think a lot more people already understand this, that what DeFi means for an ecosystem overall and its overall economy, the place that it has akin to the finance sector of any TradFi economy or traditional old world economy. This is what's needed to scale. If we can scale this up, not just the liquidity, it's one thing to have liquidity in there and then no one's really participating, but to use this for borrowing, to use this to extend your position and your risk tolerance so that you can participate in the Tezos ecosystem in a way that you hadn't before. This leads to overall growth of the lending markets, which leads to the growth of the DeFi markets. The DeFi markets, sustainable growth of them, are very much dependent on the scaled apparatus that is lending. So if our growth as an ecosystem is dependent on the growth and scaling and sustained scaling of DeFi, and the sustained scaling of DeFi is dependent on lending, that's where we need to see this as an ecosystem imperative. Let's get the liquidity up. Let's get the participation up. I'm not someone who believes in putting in incentive tokens, especially, early on. Definitely something like, you look at Compound, they put the smart contracts out. It grew organically for a year and a half. When the comp token came out, it was already very large and very well used. It was very strongly established. Otherwise, you get what you got back in sort of that summer, fall 2021 era, where people will come in for the incentives and then they will just leave right away. And also just as a product developer, if people are incentivized to come in and use your product, they're going to just love it because they're getting money. And you're not going to uncover all of the hidden problems or defects or things you can improve. You need to get really deep feedback if you're going to make something that is sustainable and people just love and is growing. Otherwise, no incentive in the world matters anyway. And once it goes away, it's like, wow, people are all gone. Why are they gone? I thought people loved it. It's like, well, you don't know all the reasons because they were all saying they loved it because they were getting paid. Now where are you? So you've already spent all this governance token. It diminishes, credibility on that front, and you're spent out and you don't know where to go. So, so I'm a big believer in organic returns, and that's the other key thing about lending. Just like liquidity pools, the returns are very much informed. They are informed by supply and demand. So the borrowing rates you see, the supply rates you see, that's based on the borrowing lending activity that happens. It's completely automated. So it's an automated interest rate maker. And that's the key. That's also why it's sustainable in its growth, because there will always be something there. Either the supply will be very attractive, or the supply rate will be very attractive, or the borrowing rate will be really attractive. And once someone does something to fulfill and take advantage of the rates on one, that will send the other rate in a position that will be much more incentivized organically. And then people will come to fill that, and then that will send the other rate in a place that's much more attractive as well. So all of this is, it's an organic seesaw, but ultimately it grows. And the basis of that is people wanting to do something with the capital funds, with the borrowed amounts.
And as you say, like the key to all of that is people participating and bringing that liquidity up and getting involved and
Yep.
giving you that feedback, right? So for people who are interested in
Mhm.
participating and interested in exploring and being a part of that, um, how can they do that?
Go to Tezos.finance. So Tezos.finance, and then you'll see launch app. So it'll be the actual app link would be app.tezos.finance. Yeah, you can go there, connect your wallet, participate. You can go to the Discord, talk to us there. Anything you want to report, anything you want to suggest, anything you just want to talk about, you can definitely drop it in there because we're reading and watching that.
I'm personally curious. So, we've all borrowed in our lives. We've all had
Mhm.
experiences with
Yeah.
borrowing within the traditional finance space. How will the experience of borrowing on chain on a platform like TezFin differ from what I or others like me might have experienced borrowing from, let's say, a bank?
Yeah, well, for one thing, it's on chain. It's a smart contract. It's automated. It's decentralized. It's based on the activities of many. And decentralization is a great value that we say, but it sounds too much like just ethos alone. There's a very practical benefit to decentralization, and that is security. You can't. It's not one person who can come in and change things. And we've seen yeah, and the other thing is this is mathematically it's based on math. I mean, it's either you have the collateral to do this or you don't. It's not like the prejudices that we see in the traditional finance system where some people can borrow a ridiculous amount of money when they don't even have a tenth of the collateral that would be able to cover that because of whatever X factors that are in that. And other people who do have collateral, they do have a position, they are competent, they will pay it back, they are really ostensibly the right people for a loan, but they don't get it because of societal prejudicial factors that affect that. This puts everybody on the same equal platform. You have a collateral you can borrow. If you pay back your debt, uh, then you're fine. If you don't, and you go above the borrowing capacity, you get liquidated, and that's what it is. So we'll have a lot more balance and a lot more opportunities growing for people who otherwise wouldn't get them. And I think also what led to the growth of blockchain overall, the impetus of that, we saw in the greed and the 2007 finance crisis and everything. Those who are able to take capital resources and use them for things that they shouldn't be doing because of just over trust in something that is not mathematically sound and sends the whole world into chaos. And we're still paying off that debt as a
And
global
they're still
society.
doing it.
Yeah, it prevents that from happening. And Arthur mentioned this a couple of times too, and I remember at TezDev, after everything started to slide and all the big scandals of 2022, and it's true. I mentioned this a lot myself. Like all the big collapses of systems that were DeFi or they called themselves DeFi or played off of this. Things like the Celsius and the Nexos and these were centralized platforms, but the decentralized platforms, the decentralized dApps, the ones that were Compound Aave, you look at other Uniswap and Maker and all these other systems, like they were fine. I mean, they took a hit maybe in liquidity a bit because of just the markets going down. I mean, that's natural. If the value of the coins that are collateralized goes down, so does the value of the liquid. But people were participating just as much. I mean, and they actually held their own pretty strong, even on the liquidity front, even as there was a disproportionately higher collapse of the actual value of the tokens that were in there before the collapse happened. So I think that bodes very well for the future. It's like, oh, we're gonna get to levels of liquidity, volume, and participation in DeFi in this coming cycle that are just going to far outweigh anything we've seen in the past because it's proven itself. The growth is going to happen. Tezos is right on that wave. We have all the pieces in place. Now this is that final thing that's needed to get it all activated. But the key is we got to get the liquidity up for the pools. We got to get usage up for the borrowing activities, and make a habit of looking at these rates and balancing them out also between TezFin and Upana. Let's have a very connected ecosystem.
Well, it
Yeah.
all sounds very exciting, and we could continue along this thread, but unfortunately, we're running short on time here. What's next for Kevin Mehrabi and the
Uh,
StableTech team? Do you have any other exciting announcements or rollouts in the works?
Yeah, for StableTech, we are so TezX. If you go to it now, you'll see a liquidity baking dashboard. We haven't really announced this just because it's not really the full vision of what we're doing, but it is sort of a nest for what's to come back. And so we'll be adding more integration with the interchain bridge that we launched a couple of years ago. So we'll be bringing that back, the Ethereum to Tezos cross-chain bridge. And this is an atomic swap bridge. It's not one where you wrap the token and collateralize it on the other chain. No, you actually have a full swap with another person without a trusted intermediary. And we're going to be adding that for Bitcoin. And that's very key because it will remove the friction of getting money into TZBTC that people have had. And that'll be huge for liquidity baking for Sirius. I believe that will definitely lead to precipitous rise in that as a mechanism. And also just the full vision for TezX is to be like a curve on Tezos. So we'll be doing a lot more other activities. We want to roll in Batcher, which is something that's a very strong tool, but I think it needs a more integrated approach for it to be utilized in the way that it should, as well as also stablecoin aggregation by bringing in all these V3 Uniswap V3 logic dexes. We definitely have 3Route, we have Crunchy aggregator as well, but we will be focusing on these stable coins and bringing aggregated liquidity to the places that it's needed the most. So the integration of all of things, I think, will be great for all different branches. So that's to come. Yeah, and then stay tuned for the updates on the StableTez side as well. So we're really happy about that. I believe the next step for us will be also going to FA 2.1, which would be a L1, L2 compatible coin. So for USD Tez, for ETH Tez, BTC Tez, and then more tokens to come, as well as a new minting and enrollment platform. So, but yeah, I'd say in that order. You can see it. Yeah. So that's for the StableTech stuff. But also aside from for the StableTech stuff, just myself, Cryptonomic, and others, we're actually starting a new project, a new company. We started out of the US called Blue Harbor. And Blue Harbor is taking all of the Tezos related IP that's been built over the last 5-6 years from over $5 million in grants from the Tezos Foundation to Cryptonomic. So that's the Kinsei Indexer, Kinsei SDK, like Kinsei JS, Nautilus Cloud, the first cloud service on Tezos, Aeronax Explorer, the most powerful explorer, comprehensive and designed for enterprise adaptability, and Galleon Wallet. All of these things are coming into, so that'll be branded Blue Harbor, and we're all collaborative together on it. Cryptonomic team, Wealth Chain team, all of that. And yeah, this is not a DeFi thing. This is a pure equity-based US corporate venture, which I think is very important, especially now as we see Oxide Alpha for all the work that they've done. I don't know, their future is I don't know what's going to be happening with them, but definitely they've done a lot of great work with getting California to sign up for Tezos Technologies as well for the DMV. Definitely, they've done a lot of great work with token standards, and for enterprise development in general. That's going to be the focus of Blue Harbor. So we definitely need that. We need a U.S.-based enterprise development firm that's able to adapt these kind of big deals that we see with Tezos in Europe. Let's bring that to the US and start to build inroads in the US because, yeah, it's a tricky water situation, but you need to build the inroads, and that'll definitely expand things for when the time comes. Yeah, so that'll be another thing that to look forward to.
So
But yeah.
what you're basically saying is you're going to be a very busy guy this year.
Oh yeah. No, I have no personal life. It's you have to pick and choose your avenues. But yeah, it's very exciting. This will be probably the most exciting year we've ever had in the Tezos ecosystem, just given all that's happening on a development front and also just the general market climate. I think people are starting to wake up again to crypto in general, and certainly Tezos has been making waves recently as well.
Sounds good to me.
Yeah.
As I mentioned, we're coming to the end here, and before we close off, I'd like to remind our viewers that we're giving away $50 in USDTZ today, courtesy of our good friend Kevin Mehrabi here. To enter, just type the keyword !TezFin into the comments below this video on X for those who miss out today. We remind you that there are awesome giveaways to be found frequently here on TezTalks Live, so keep tuning in. If you'd like to get in touch with us, our social media contacts can be found at tezoscommons.org/TezTalks, and we'd love to hear from you. Kevin, thanks so much for joining us today. It's always awesome
Thank you
to
for
speak
having me.
to the folks building out amazing platforms like this here in the Tezos ecosystem and keeping Tezos at the forefront of the DeFi revolution. Is there anything else you'd like to mention before we sign off here?
No, thank you.
Fair enough. To everyone out there in Tezos land, thanks for joining us on the TezTalks live stream. I'm Stu from the Tezos Commons, and our awesome guest has been Kevin Mehrabi, co-founder of StableTech. Now let's go do some on-chain lending.
Yeah.